Joining us now is Macro Risk Advisors Chief Energy Strategist Chris Kettenmann. Chris, good to see you. Thanks for joining us.
Thank you.
What's your take? You think we go below $2 by Thanksgiving?
I don't. I actually think it's a good time to start buying oil. We have OPEC next week. We have increasing geopolitical tensions in the Middle East with implications for the global market. And we're bullish into 2016. Really, we expect lower 48 declines in shale assets to accelerate and China demand to hold up.
So you're looking at oil as well as gasoline. You think both go up?
Yeah, I mean, gasoline's a refined product from oil.
What do you think of yesterday's headlines, Saudi, OPEC, and that next week, that meeting? What do you expect to see in terms of further detail on that front?
Sure. So we have OPEC next week. It was clearly a huge event for the markets last year with, Thanksgiving, oil trading down 20% or so. Everyone we talk to is positioned like it's a non-event. That OPEC is not going to cut. They're going to pursue their market share strategy, pressing prices lower so they can retain customers in China. At Macro Risk Advisors, we talk a lot about volatility, derivatives. I actually think because of how one-sided positioning is, it might be worth owning some volatility going into the event. Upside calls, for options speak. But really, it's a positioning call. And then more broadly...
So own oil going into the OPEC meeting?
Yeah, own volatility in oil.
Yeah. Well, that's something that people that don't follow this every day need some explanation on. Oil volatility instead of the VIX in equity markets. They look at OVX. Yeah. It's unbelievably high. It's at 45 still here. Do you think that you could get to like 50, 60 OVX again?
We do. I mean,
yeah. Really?
I mean, futures positioning is incredibly one-sided going into this meeting.
Really?
And...
That's a big call.
But in terms of the upside for crude, have enough of the shale producers in this country gone out of business that has removed that supply from the market permanently? Because you really haven't seen that.
No. I mean, I think you answered your own question.
They can just crank it right back up, right? So that puts a lid on prices, would it not?
Well, so we actually completely agree with that statement, that there is a lid on prices. Without a sustained cut from OPEC, I think, crude prices will trade in a range from about 60 to 70 over the long term. I mean, shale oil is a short cycle investment, kind of acts like a shock absorber in the market. So as prices go up, companies can leverage their balance sheet, reinvest in the asset, and drive production back up. Now, that said, a lot of the balance sheets from U.S. shale producers are in horrible conditions. So for them to, again, re-lever should prices recover, I think is a question mark.
Mm-hmm. A word on China and demand, because this is one of the really key parts of the world where you're seeing energy demand. And you said there was a second official in China basically reiterating that the economy is not doing well.
Yeah, the National Development Reform Commission, Maria. Of course, this is like big central planning. But they've had the PBOC and whatever that is, the NDRC, in the last 2 weeks have basically said, look, we're seeing they're reiterating that there's more downward pressure in the Chinese economy. I think that they're basically nervous that the U.S. raises rates. So, again, they're trying to back the Fed off because they're saying we're still slow. How would you take that in terms of the demand story in oil?
Sure. Two great points there. I think we are seeing a lot of noise from powers that be around the world talking down the dollar in front of the Fed hike. The second, specific to oil, the China demand story has really been one of the most interesting developments in oil markets this year. We've seen a shift from diesel, from the refined product that really drove a lot of the heavy industry and fixed state investment that would define the last 20 years of investment, to gasoline. I mean, it's been really almost an overnight shift. That's a retail story, that's a consumer story, and it's in line with the economic reforms that the Politburo is pushing.
And that really links up to the consumption story that the Chinese are trying to pivot from industrial blow-up to consumption. And if it's gasoline, you're saying that that's a misunderstood bullish story, that pivot?
Yeah, I think that's exactly right. And that's why we're bullish on demand, at least holding up over 2016.
All right, we'll see if that happens going into the OPEC meeting and beyond. Chris, thank you.
Yeah, thank you.
Great insights from you. Chris Kettenmann joining us there.